I keep on saying if you get a follow through day, you have to get stocks. I mean, I know Bill always says, "Oh, okay, you got to buy something on a follow through day," but when you are forcing it, if you're forcing a buy, uh, then and you can't really find a lot of names, then I just think that that the follow through day you shouldn't actually listen to it that much when you can't find names. You want the follow through day plus stocks. If you just have a follow through day and you can't find stocks, then I put a big question mark over, is it really the beginning of a move? Because you'll see, and maybe when we go through some examples, that when the market really follows through and you get a turn, you've got stocks that have already turned months before, weeks before the market's turned, and it's more of a question of what do I buy, and not I can't find anything to buy. So that's why I just think this is more of a trading rally, and not the start of something that's going to last for a long period of time.
I'm going to go back to Marcus Smith. Unless David, is there a stock that we should look at before we go into the 1982 bottom?
No.
Okay.
Not that
let's are we going to focus on the S&P or the NASDAQ?
I'm going to look at the Dow.
Oh, okay. That's good with me.
Well, first start with the weekly and go to the end of 1982 and go to monthly so you can really see what's happened here. The market had a great move up from the late 40s, 1949. The 50s were great up through 1966, 65 or 66. You can see it hit 1,000 at the end of 1965. And then how many times? I mean, it actually went through it a few times, but just could not get going. And that was the 70s, especially a period of inflation. And it's somewhat similar to, it seems like, what we're going through now. But you can see it hit that high of 1,000, 1965, 66, and it went actually sideways for 12 years. I'm not saying that we're going to have I'm sorry, not 12 years, but 16 years. We're going to have a 16-year sideways market. But because the Fed is on the other side, we might have a number of years where the market is actually have to mark time, and we have to get inflation out of the way. And so I want to make sure people know that things like this can happen. And I think the indexing that has taken place here since really the lows in 2008, 2009, that everybody has indexed, we might be coming into a period where stock selection and active management might be a lot more important than just buying the indexes and staying with them. But anyway, so 16 years of sideways action. And then if you go to the weekly, you'll see three moves in really, you can kind of combine the last few months as lows into that low of 769 on the Dow. The other thing that's then if you go to the daily on that, you'll see that the final low, which kind of undercut two other areas of 786 and 784, that look at the volume. You barely got to average daily volume on a lot of those days. And in the rally before that in July, at the beginning of July, you got some very, very nice volume. You actually saw some good volume in May and in April. And see, it looks like the market, there was the accumulation going on in the market down in those bottoms. Yeah, that's great. You circled those because you can start seeing small signs that, hey, the market might be bottoming. And then when you get that final low and and you really didn't get much volume, and then look at the explosion that occurred in that in that August period. I think that's when they started lowering interest rates and the market exploded. And I remember after about 3 or 4 days, everybody was saying it's gone too far, too fast, and it's extended. You can't buy here. Well, the market, after so many years of going sideways, just kept on going. You can see from 850 it went all the way up to 950 in about 5 or 6 weeks. And that was the start of that great bull market from 1982 all the way to, I mean, really to almost 2000. But look at the comparison of the volume and see how the volume characteristics changes. And that's why I look at volume so quickly, so closely, is because it's supply and demand. What is happening in the marketplace in terms of the buyers versus the sellers? So the other thing I wanted to take a look at is that even at that time when the market was going sideways, that you can look at stocks and you can just keep it on this date, I guess, and look at Walmart. Walmart was still trading back, was trading long before that. I think it started way back in the 70s. And you can see, if you can kind of highlight this, what happened during that during that August period when the market exploded, is over that period, as the market started going, look what happened to the volume on Walmart. Volume on Walmart went way up, and that is a stock that was already in an uptrend. If you go back to a weekly, Walmart had been actually in a nice long uptrend since 1977, and this was just building a base on a top of a base and just flat bases, and then would move higher. And then when the weight of the market came off in August of 82, it went up even at a faster rate. Look at the acceleration in that price. And that's what I would love to see is, maybe not, I mean, this started actually 5 years before the market, but you want to see a number of stocks that are in uptrend. So you can get some confirmation. And so again, it's follow through day plus individual stocks that should get you excited about the market. Here's another one. Look at Pulte Home, PHM. And so I had to find ones that were still trading today because because it would have that history in there. And here's Pulte Home. This was a stock that came out in June of 1980. Came up, built a nice long base. It looks like a base of about at least about a year, and a nice flat base. And look how tight that stock got right before it exploded. And look at the volume. I mean, this stock, I mean, it's kind of crazy. The stock was trading 5,000 shares a day, 16,000 shares a day. But that's when the market, a huge day in the overall market, was a 20 million share day. But very, very tight, no selling at all. And then look at the volume as the market started to. This stock actually started breaking out in July, even before the August move of the entire market. So there's another sign of what you want to see. You want to see stocks that are starting to move before the market starts moving. With one other one we could take a look, and I've got a number of written down of stocks that had great moves in the 70s. And so just to kind of say to yourself, even if you're in a sideways market, there's usually going to be some groups and some stocks that are doing well and starting to take off. If you go to a monthly chart, use the same date on Walt Disney, DIS, as it was called back then, Walt Disney Company. You'll see that here's a stock. Yeah, here's a stock that had a great move all the way from the 1966 is when this stock broke out. This is right when the Dow itself was starting into a 16-year sideways movement. And what was this stock doing from 1966 all the way to 1972? 6 years of a terrific move. I mean, going from, I guess, split adjusted 7 all the way up to 100. So even if we have a tough market within the indexes, there are usually companies that are out there that are innovating, that are growing, that you can still take advantage of. And that's why you should never walk away and say, oh, I can't find anything. There's usually a few stocks that can even buck the downtrend or the sideways movement of the overall market. And then this built a nice long base. I mean, this was a, you know, how many year base was this? A 10-year base. But then this took off and then had a nice move during that during the 1980s. And then other ones I'm just going to mention that had big moves, and you can actually go back and look at these yourself and look at stocks like McDonald's that had a great move in 1971 through 73, Halliburton 71 to 74, Brown-Forman Distillers 77 to 82. And it was a lot of, during 66 through 82, there was a lot of oil stocks, cyclical stocks, gold stocks that work. So even in a very tough market, there are opportunities out there that you can take advantage of. And you just get, and I've said this so many times, you get one or two names a year in your portfolio that are the outperformers, and it makes a huge difference in your performance. So again, sort of summing it up, even if you had a tough market, look for those names with a better relative strength, the ones that are breaking out, that have the can-slim characteristics, and look for the volume characteristics in these stocks and along with the indexes in the market.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.